What's going on, Dividend Chasers? It's the Dividend Bloodhound here with another investing episode. In this episode we're going to be talking about my Freetrade portfolio, now worth £3,500. We're going to be giving a quick update on it, where my losses are, what I've added to it, and a complete rundown of where I am at currently. I've added a couple of positions since I last did my video, so that is ultimately what this video is about. I've added Home Depot and I added Raytheon. Now you might have seen in the news that Raytheon has merged with United Technologies, so both of these companies are now combined. They had to sell some assets to do that, both of them. So BAE Systems bought part of the GPS systems that Raytheon used to produce, and this is all based on competition rules, so they can't monopolise the market. But yeah, United Technologies, which own Pratt & Whitney, which are the engines for the F-35, and Raytheon, who make predominantly radars and missiles for the United States Navy, Air Force and the UK to that extent. They've now combined and are becoming a whole company by themselves. I bought one share in Raytheon before this happened, and then from this I'm going to end up with 2.3 shares of Raytheon Technologies. That is their new name, and hopefully that will give me some appreciation in value. 2.3 shares, hopefully people buy in after the risk of this has subsided, and I'll end up making a little bit of a profit on that. But I wanted to buy the company anyway, and I'm happy to own Raytheon now Technologies, and the goal isn't to sell, but I'm hoping for some appreciation there, and maybe even a green stock in my portfolio. Wouldn't that be great? Please hit that subscribe button in the corner there and hit that like for the video. Help get my video out there to the masses. We want to get people investing, as many people as we can, even in these dark times when there's blood in the streets. As a famous investor once said, you have to, even when there's blood in the streets and some of it is your own, you have to carry on investing and averaging down. And that is exactly what I'm doing, and that is exactly my plan. With that being said, let's actually get into the portfolio. Catch you in a bit. What's going on, guys? Welcome to the next part of this video, and here we can see my portfolio value, £3,456, slightly shy of 3,500 that I thought I would have, but hey, that's the market for you. Right, I'll just briefly go over to the insights, the new shape of my portfolio. And we have a new leader, which is consumer goods, which has been added to by my buy in Home Depot. Second, we have food and drink. Next, we have industrials, finance, health, tech, teleco, energy, then construction, other, and then logistics, mining and travel. Travel, I might be looking to add some more cruise line stocks to this as the crisis wears on, just saying that now. And then back to my actual portfolio. So number one, still largest value just about, is Boeing, £401 current value, 45% down, or £333. Next up is 3M, 3 shares, currently at £324, 13% down, £52. Keeping an eye on these guys with the boost in production of masks for this crisis. They're sure to benefit in the longer term. AbbVie, we have currently at £296, 5 shares, 10% down, or £33. These guys are working in conjunction with all the other healthcare companies to deal with the healthcare crisis. So if there's a breakthrough, watch on their share price. AT&T has suffered a significant hit right now. I don't think I've seen the share price lower than this, $27 a share. And my 12 shares are worth £266. I'm 24% down, or £84. The yield on these guys will be incredible now. Really need to look at adding to these positions at the moment. My main core portfolio, I really should add to a little bit more, and that is something I am considering. Coca-Cola is next up, again significantly discounted, not as low as I've seen it, because it's been down to the 30s, but certainly still significantly discounted. And my position of 6 shares is worth £212, 14% down, or £35. Next up is PepsiCo, only the 4% down. My position is worth £201 for 2 shares, 4% down, or £8. Next up is MasterCard. Positions worth £192 for 1 share. I'm 7.5% down, or £15. Looking forward to trying to get my hands on more of MasterCard. Really good stock that I would like to get hold of more of. Same with Visa and American Express, to be fair. IBM is next. My position is worth £171. 2 shares, 19% down, or £40. Next up is my new purchase, a share in Home Depot. A very beaten up company right now, to be fair, even though it literally just increased its dividend just before this crisis, and showed really strong numbers. Current value is £144 for 1 share, and I'm down 2% on this one right now. It was down a little bit lower than when I brought in. It went all the way down to 150 at one stage, but I couldn't afford. That was still 10 days from payday for me, so I couldn't afford it at that point. So I've had to jump in basically now when it was in the 170s, and it seems to have like balanced out there for now. I'm very happy with getting hold of this stock. It's been on the watch list and a want for a while. Next up is McDonald's, another beaten up company with so many of its stores closed at the moment. So I don't expect this to jump up in value anytime soon, but neither I don't think it should go down too much further. I think it has largely bottomed out. Current value is £129, or 13% down, £20 down. Next up is Shell. My current value is £126 for 9 shares, 33% down, or £63. And look at my average per share there, 21, and the current price is 14. I need to work on averaging this one down. The good point about this one is that there has been murmurings of talks between the Russians, Americans and OPEC over ending the oil price war, but it was as soon as that was said, later on in the same day, it got stalled again because of the Russians getting cold feet about it. So there's been a little bit of positive news, but then it's gone negative again. So there's no meeting officially lined up yet, but there is murmurings of it happening, which is a good thing. And that, well, it's a good thing for the company. It's a bad thing for people at the pumps, but not many people is buying petrol right now anyway. Next up is Microsoft, or as I like to term it, the unicorn stock. Dividend growth stock, a growth stock and a dividend payout all at once. And it's actually green just about, even though I said I don't have any green positions. So I'm definitely not selling this stock though, 100% not. It's worth £124 at the moment, and I'm up £3.50, well, nearest £3.50 on it, or 2.8%. Need to get hold of more Microsoft over time for sure. Visa is the next one, as I already mentioned with MasterCard, a key stock. Cashless is going places. More and more people are using cards. It's definitely one for the future. Current value of £122, 13% as near as makes no difference down, or £18. Again, another great time to get hold of this company. Being all the way down to 135 at one stage, and its top value was 211 or so. So great one to get hold of for appreciation purposes, let alone the growing dividends. Next up is Raytheon. I got in on this one just before the merger with United Technologies, as I already mentioned. It dropped off a little bit in the final day of trading as just Raytheon, so I lost a fiver on it. It cost me £100, but my research suggests that I'm going to get 2.3 shares of the new company, and the new company's share price was $55. So I'm going to make a tiny little bit on that. I'm going to make a tiny little bit of profit on that, but I don't plan on selling because I think that the price will only appreciate more after that, because this company is going to dominate the defence industry now. They own such things as the jet engine for the F-35, which is Pratt & Whitney, a whole host of other things that Technologies brings to the table, and then in terms of aerospace, and then Raytheon own pretty much the radar field and the missile field for the future, as well as navigational systems. So that is a really good company for me to get into, and I will be looking to add more to this one. I have next up I have Procter Gamble as a defensive stock. You can see that it's a little bit up in these times of recession. Its current value is £93 for one share, and I'm 6% up, or one crisp £5 note. Again, another dividend king that I will continue to add to over time, a solid company. Caterpillar is next, currently 9% down, which means £9 because I paid £100 for the share. Its current value is £92. They've had to stop production at a few of their plants across the world due to the healthcare crisis that is going on, but its fundamentals are always been and always will be quite strong. It is a dividend aristocrat now, and I don't see it cutting its dividend in the near term at the moment. And then when the world economy does bounce back, it'll be placed to go with that uptick as well, especially if there's big national infrastructure spending. It has been down into the 90s at one stage, so that really would have been a bargain to get hold of there. But I had to wait till payday. I've got no cash reserves left to deploy, so I couldn't get hold of it at a cheaper price. Next up is BP. As I mentioned with Shell, there is talk of ending the oil price war. I have 26 shares valued at £87, or 27% down, £32 down. Looking to average this position down as well, so it's not such a big dent in my portfolio. UPS is next for a price of £72 for one share, 2% up and £1.50 up. And I think that is largely due to how many people are going to be at home and they're going to need deliveries bringing to the house, so this company stands to make from that. It's a great dividend payer. They've got no need or plans to cut their dividend at the moment. And I should probably stack up even more on this company. Amex is next, as I mentioned with MasterCard and Visa. I'm going to breeze through this one because it's the same as before, looking to get hold of more. Current value of £59 for one share, 17% down. It's the most down out of all of them, or a £12 loss on my investment. Definitely looking to get hold of more of this one. Unilever is next up. It's currently worth £40, 6.7% down, or £2.90. Another stock that should ride out this problem quite easily. It did suffer a problem before this crisis began, and I think that's what's holding it down at the moment. Nobody's sure how this should affect them. Really, being a cleaning ware supplier, soap supplier and food supplier, you'd think they would do quite well. Next up is Rio Tinto Mining, up 3%, or £1.10p, current value of £37. I'm quite surprised about this one really, because any sort of bad news to do with the epidemic sends this one spiralling downwards, but at the moment it's up, a little bit different to what you would normally expect. Next is the S&P Dividend Aristocrat, obviously walloped with the rest of the market down at the moment by 23% or £10. Current value is £34. Really need to add to my ETFs, and that's not the first ETF you'll see. I really need to carry on adding to them and get that to be a significant chunk of my portfolio. Next up is GSK, 2 shares of GSK, current value of £29.88. 2 shares, currently 8.5% down or £2.80. Still waiting on merger talks between GSK and Pfizer, or they're creating a new company between them. Waiting to see how that goes out, but GSK's fundamentals are strong, and so is Pfizer's for that matter. I keep meaning to buy a Pfizer share as well, so I can benefit twofold from the uncertainty around the merger, but I believe the merger will go successfully. Commercial property, another bad boy of the portfolio, currently down 40% on this position, £28. Still paying its dividend though at the moment. I own 42 shares. I'm £20 out of pocket at the moment, but this could be again a great time to average down these positions at 68p, where I was buying at £1.15 a share, and their dividend has remained exactly the same. And I've still received the last one a couple of days ago, which I'll show you just shortly further on in the video. Next up is Carnival, absolutely into the floor at the moment. £6.9 their value at the moment. My position's worth £18.27 for 3 shares. £72.72. I wish I was £72, less than £72 down. 72% down or £47 out of pocket. Average per share 22. As you can see there, I bought in when I didn't think it was going to be that bad, and then I've kind of came down again. Every time the price has halved, I've bought in again. I keep meaning to add a couple more of this one because it won't cost me a great deal, to be fair. They have cut their dividends now though, as seen in a previous video of mine that's on about should you buy cruise line stocks or not. I'm in on them, and I keep meaning to boost my position to about 10 shares, and that would only cost me about £40 to be fair. So and if they were to recover long term back to where they were, even though that would take a very long time, that would actually give quite a decent return on investment, especially when the dividends eventually return. But this is definitely a 5 or 10 year hold, I would say, so definitely buying for the long term here. Not something I'd definitely recommend. You need to have the stomach for the risk for Carnival. I've just shown you the upside there, but yeah, please do your own research and don't just take my word for it. If you don't like risk, leave it well alone. Next up is Euro stocks at £11.82 a share, down 36% or £6.80, along with basically Italy and Spain. Italy, Spain, Germany and France practically being on lockdown, and Italy and Spain being hit properly hard. It's really sad to see what's going on there by this crisis. Next up is Legal and General, as with all insurance companies, getting pummeled into the floor right now. Down from £3 to £1.60 a share. My current value is £9.50. Lost £6.50 and 40% down. Next up is the S&P UK dividends, high dividends should I say. Currently down 34% or £4 in line with the rest of the market and the rest of the ETFs across the world, to be fair. Current value of £8.30. Next up is HSBC, recently being forced to cut its dividends by the Bank of England, so I don't think I'm not going to see a dividend from this bank at the moment. Current value is £7.96 for 2 shares. I'm £3.80 out of pocket or £32. This has been largely caused by people bailing out because they realise there's going to be no dividends for the foreseeable future. I'm too late on this one, so I'm just going to keep hold of it and play the waiting game. Might even buy a couple of really cheap cut price shares, to be fair. Average down my position for further gain. And last but not least, sneaking in at the bottom there is Balfour Beatty. £2.11 a share, £4.22 current value, 21% down or £1 And should really have more of this position, especially with HS2 coming around the corner. Spending on that won't stop, regardless of what happens due to this crisis. I have a free share queued order there. If anybody wants to get hold of a free share and start your investing journey with Freetrade, please just leave a comment in the bottom and I'll drop you a link to get yourself and me a free share. We both benefit. Quick glance over my watch list there. I'm not going to go through them, but these are my targets, especially the ones that are further down than others. So Intel is only 6% down, but I'm definitely high on the target list is the ETFs you can see there, and Apple. And then going down, looking at these ETFs, the All World, the All Share and Aviva, Johnson & Johnson and the Nasdaq, and Cisco, Nike, Disney, Stryker, Lockheed Martin and Starbucks. Starbucks is a top priority as it's been on my list for so long. It's about time that it actually got into my portfolio. I'm just going to finish off with a quick look at my activity over the last couple of days or so, month, because I've had some dividends come in. So there you can see my buys in Raytheon and Home Depot. A dividend coming from Coca-Cola, £1.67. Dividend from commercial property, 16p. Dividend from the S&P UK, high dividend, 14p. Dividends from S&P Dividend Aristocrats, 25p. I'm not going to say dividend anymore because you can obviously tell what it is. Pepsi of £1.30, a little top up there. BP £1.87, Euro stocks 5p, Shell £2.91, a buy in Boeing, a buy in Carnival and a buy in BP, a miniature top up there, Unilever 34p, McDonald's 87p, a buy in Amex, MasterCard and GSK, Carnival Cruises, last ever dividend for quite a while I would imagine, 3M at £2.99, a Boeing buy at that price, can't believe I paid that, I should have waited. Microsoft buy at 120, a big top up there on the 11th of March. IBM £2.11, Boeing's last ever dividend as well, timed that well, or not last ever I really hope, but last dividend for a while at £2.66. And then you can see my buys in Carnival, Shell and Rio Tinto there, and then we're back to where the previous update video will have taken over. So I have £11.38 in my account basically from those dividends, and that will be reinvested shortly. If you've got any tips that you think I should reinvest in on my portfolio, or anything that you saw on my watch list that you think I should put that £11 in, please be my guest. Give me a hint towards what you think I should do, or if it's in my portfolio already, let me know in the comments section below, and that would be spectacular. And that about wraps us up for this one. I'll catch you back out in the real world. Thanks very much for watching, guys. I'm glad you stayed to the end and you had the endurance to stay to the end. If you have done that, thank you very much. I really appreciate the watch time. I need it, I really do. If this video has brought you some value, I'm very thankful for that. Please hit that like button and the subscribe button. It will help me enormously in the growth of this channel, and please have a look at my other investing videos and stick around and stay tuned for the next Freetrade update coming in either 2 weeks time or in 4 weeks time, dependent on the market conditions. Who knows where we'll be in a couple of weeks time. Thanks very much for watching, guys. Catch you in the next video.